So if we check the capex plan for the company, so company will be getting the maximum revenues from these capex till FY27, which would be additional more than 5,000 crores. In this video we going to discuss about Jubilant Ingrevia का जो स्टॉक प्राइस है वो लगभग 50% से करेक्ट हुआ है, तो उसके क्या क्या रीजंस है. We going to discuss about these reasons in depth. But before that, let's understand first what are the different business verticals of the Jubilant Ingrevia. So today we have the Aditya with us. So Aditya, let's start with like what are the different business verticals which Jubilant Ingrevia have, and what kind of a integration the company has created over the period of time.
So the company has basically three business verticals, which are the specialty chemicals, nutrition and health solutions, and the chemical intermediates business. So the specialty chemicals business consists of pyridine and picolines and their derivatives, fine chemicals, crop protection chemicals, and the CDMO. The company is the largest manufacturer of pyridine and its derivatives globally and has over 30 years of experience in the pyridine chemistry. Coming to the second business, the nutrition and health business division has three main products, which are vitamin B3, zinc picolinate, and riboflavin phosphate sodium. So these products form the important constituents in the brand offerings the company provides for the animal and human nutrition and health solutions. Now coming to the third business, chemical intermediates division has three main products, which are acetic anhydride, ethyl acetate, and ethanol. So to talk about the integration of operations, the company starts with raw materials such as molasses, ammonia, methanol, and acetic acid. Using acetic acid, they make ethyl acetate and acetic anhydride. Using the molasses, they make their ethanol. And using that ethanol, they make that acetaldehyde. So this acetaldehyde is then react with formaldehyde, which is made from the methanol, and acetaldehyde, formaldehyde, and ammonia together combine to form pyridine, right, which is then used to make the wide range of pyridines which Jubilant has. Right. So this is the basic integration of operations.
Right. And if you actually wanted to understand in depth about Jubilant Ingrevia's business model, so I have created a separate video which you can watch. In that video, I have compared the business model of Jubilant Ingrevia versus Lakshmi Organics. So you will get very good in detail understanding about the both businesses. So after that, let's start understanding about like why there is a pressure on the company's margins, why the margins which used to be about 20% before few quarters, and right now it is about 11 to 12%. So let's start with their first segment, which is acetic acid based segment or acetyl based segment. So Aditya, what has happened with the acetic acid prices and why there is such a huge pressure on their margins?
So before starting with the acetic acid price segment, if you look at this chart, the majority of their business has been from the chemical intermediates business, which are the acetic acid based products.
Right.
So now talking about acetic acid, there has been so as you can see from the chart, in the period of 2019 to 2021, which was the COVID period actually, the prices of acetic acid have increased from 31.83 rupees per kg to almost 68 rupees per kg as seen in the chart.
Right.
So basically acetic acid is a precursor to acetic anhydride, and acetic anhydride is used to make the precursor ibuprofen and the paracetamol,
right,
which were used during the COVID times.
Right. And that's why there was a high demand for these particular drugs, and we can see the reflection in the acetic acid prices also. And during that time, I think certain capacities also got shut down in various locations, but those capacities are right now coming back, and that's why the prices of acetic acid also has fallen, and same is the case with acetic anhydride.
Since acetic acid is the material imported by Jubilant Ingrevia to make its products anhydride and ethyl acetate, it has affected the chemical intermediates business. As you can see from this chart, the margins of the chemical intermediates business have decreased from 27.3% in Q1 FY22 to almost 12.7% in Q3 FY23, and the down cycle of acetic acid is still going on.
Right. So we have to understand that Jubilant Ingrevia's main business segment is based on the chemical intermediates or the acetic acid, which got impacted heavily because of correction in acetic acid prices. So this is the first reason. Let's move ahead and understand about the second reason why the company's margins and profitability got impacted, which is their nutrition business.
So the company is currently facing problems in the nutrition and health solutions business as well, due to the ongoing flu situation in the US and Europe. So the company faced an unfavorable pricing for their nutrition products and also they had a reduction in consumption from China. So due to this scenario, the margins of the nutrition and health solution business consistently declined from 24.4% in Q3 FY22, which was just before the starting of the flu, and it has now come down to 6.6% in Q3 FY23. So if you have gone through the con call of Jubilant of Q3 FY23, the management has also mentioned that this flu has lasted for a much longer time, which it usually lasts historically.
Right.
So they expect this flu situation to normalize soon.
So this was the second reasons about the nutritional business which got affected because of flu situation. And the third reason is basically due to increased coal prices, which almost doubled over the last 1 to 1.5 years. So let's discuss about it.
So now Jubilant uses coal as its fuel to generate the energy and power. Jubilant either gets the contracted coal from the government or it imports from outside. So what has happened right now is the government has not supplied their contracted FSA coal to Jubilant. So that's why they had to rely on imports. So the coal prices during that time increased from 5,000 to 6,000 rupees per ton to almost 12,000 rupees per ton.
Right.
And it has right now stabilized at 10,800 rupees per ton, but still it is a higher price. Due to the importing of this high cost coal, Jubilant had to take a hit on their margins due to the higher fuel and energy costs. So as a result, the margins of the specialty chemical business have reduced from 27.7% in Q1 FY22 to 18.7% in Q3 FY23. So the good part here is that the drop in margins in the specialty chemical business has not been as sharp as compared to the drop in the nutrition and chemical intermediate business. The important update regarding FSA coal here is that Jubilant Ingrevia has got the clearance to get the FSA coal from the road transport. The transport of the supply of the FSA coal via the road transport will begin in Q4 FY23 and they will start getting the benefits from Q1 FY24.
And the margin expansion also will happen once this basically the FSA coal which is getting transported by the road route, it will eventually shift to the railways route and actually they will get the margins improvement, which is the low cost coal which is supplied by the government of India. So these were the three major reasons why Jubilant Ingrevia's profitability and profit margins got affected. Let's now discuss about what are the capex plan company have and how strongly company has maintained their balance sheet.
So as I mentioned earlier, they were getting the majority of their revenues from the chemical intermediate business, where the products have a bit of a commodity nature. To shift their focus from the commodity products to the specialty products which are there in the specialty chemicals and nutrition business, they have planned a capex of 2 to 75 crores, which will give an additional revenues of 5,150 crores, with the majority of the capex being towards the specialty chemicals and nutrition and health business. So the capex plan earlier was 2050 crores, which they have revised 20 to 75 crores as per their recent con call. So the revised capex has basically done into the three areas. The first area is they are doing energy efficiency programs overall for their entire business, and they are also undergoing debottlenecking for the specialty chemical products. On the second part, they are adding new capacities for vitamin B3 and vitamin B4. For CDMO, they are also planned an additional R&D expansion, which is expected to come online in Q3 FY24. So what has happened right now is, due to the nutrition and health business significantly dependent on the animal feed industry, means almost 70% of the revenue comes from the animal feed industry for the nutrition and health business. They have done capex for the vitamin B3 for the food and cosmetic grade industry. So the company is planning to set up a new GMP plant for the food and cosmetic grade vitamin B3 and for vitamin B4 for food and pharmaceuticals and other applications, which is part of the revised capex plan. The company plans to reduce the dependence from the 70s to 30, means 70 from the animal feed, 30 from the food and cosmetic grade, to 50-50, which will help in building resilience in revenues and profitability for this business going forward. Right. So the company is undergoing debottlenecking for products as their in their specialty chemicals business, as I mentioned earlier, and also undergoing the energy efficiency programs. So as part of this energy efficiency programs, they plan to source power from grid and renewable sources and optimize the coal consumption through efficiency improvement in both the generation and consumption. Now to talk about the Capex, this chart shows the debt profile of the company over time. So as you can see, the net debt of the company has reduced from 431 crores in Q1 FY21 to 351 crores in Q3 FY23. And the company has a decent cash available at hand despite of the headwinds which are going on in the industry right now. So the company has guided in their previous calls that they plan to fund the majority of their capex plan via internal accruals.
So if we check the capex plan for the company, so company will be getting the maximum revenues from these capex till FY27, which would be additional more than 5,000 crores. So total revenues of the company would be about 9,700 crores, which will take about next 4 years at the maximum capacity utilization. So if we check the balance sheet of the company has maintained their balance sheet quite well. And due to this capex, there will be a change in revenue mix also, which will improve their margins, which are currently quite low. So I think Jubilant Ingrevia is a play of change in revenue mix plus operating leverage, because lot of capex will be online soon. So let's now quickly understand about which capex company has already completed and which are the upcoming capex in the future.
So the capexes which have come online already are that Diketins phase 1, which was commissioned in Q4 FY22 with a capacity of 6,000 tons. And in Q1 FY23, they commissioned their food grade acetic acid plant of 25,000 tons. So these are the capexes which have been done already. And the upcoming capexes are as seen in this table. In Q4 FY23, there will be 3 capexes which will be coming online. One is the CDMO GMP and non-GMP plant. Then the third is the acetic anhydride capacity expansion. So for the CDMO, GMP and non-GMP plant, the earlier guidance was of Q3 FY23. However, they delayed their capex due to the additional traction they saw for the CDMO business and the new demand and new orders which they received for this business. The capex is now expected to come online in Q4 FY23. Within the first year, they plan to attain 70 to 75% capacity utilization, and they plan to attain 80 to 85% capacity utilization in the next 2 to 3 years. So also, since they have added new capacities in the vitamin B3 and B4, so there could be a change in the timeline for those capexes, while the earlier guidance was for Q3 FY24. Jubilant, in their CDMO business, they make only the intermediates, whether it is for the pharma or agro. So now what they have planned is they plan to shift into the manufacturing of actives. So if you see the recent EC document, they have applied for a whole host of agroactives and active pharmaceutical ingredients. So as part of their agroactives phase 1 plant is expected to come online in Q3 FY24. And for the CDMO, they have also done an additional R&D expansion which will come online in Q3 FY24. Diketin plant, the phase 1 has already come online and the phase 2 is expected to come online in Q3 FY24.
So this was the update regarding the capex. So whatever fall which has happened, which is more than 50% from the all-time high, I think right now the valuations are quite decent, and plus the company is doing all these capex from the internal accruals. But right now the business may not be in very good situation because of the global uncertainties, because agrochemical as a sector also got affected. If you check the results of generic manufacturers into agrochemicals, which are India Pesticides or Punjab Chemicals or Megmani Organics, their results were disaster because there has been a different challenges in this industry. Like there has been a reduced demand because of the slowdown in export geographies. Apart from that, there is a channel inventory also which got stuck. So similarly, if you check, about 40% of the revenues of the Jubilant Ingrevia specialty chemicals are from the agrochemicals as a business division. So that's why they also got impacted. But I think if we take the horizon of next 4 to 5 years, the company can really do well because of their upcoming capexes and the change in revenue mix or the product mix, which is more and more of a specialty nature where they will have the better and better margins. If you want to understand in detail about Jubilant Ingrevia's business model, you can check the detailed video, for which I have given the link in the description section. And similar to Jubilant Ingrevia's business model, we also try to dig down into various business segments of different businesses which are generally the micro-sized businesses, for which there is a very less information which is available into the annual report. So we actually go on ground and try to understand the business from its competitor, from its management. We try and understand their products, we talk to their employees. So that is how we do the scuttlebutt and try to understand more and more businesses, and that is how we have built our knowledge base, which actually helps us to understand and then allocate the capital So you can check the various companies for which we have done the in-depth analysis for the micro-size companies, and all this analysis has been shared with our microcap club members. Along with that, we also arrange the Q&A sessions with the managements, which gives our microcap members much better visibility to understand about those businesses. So if you are not joined the microcap club, you can join the microcap club, for which you will get the link in the description. And if you got benefited from this Jubilant Ingrevia's detailed understanding, why basically there has been a fall in stock price, what are the reasons, make sure you like this video and subscribe to the Value Educator channel. We have already discussed about various other businesses which also got affected, so that you also can take your informed decisions. Like we have created an in-depth analysis of Laurus Labs or Divi's Labs, and after that we have also discussed about the Jubilant Ingrevia. In future we will be also discussing about the various different business models. So make sure you like this video and subscribe to the channel, and we'll discuss about another business model at 11 o'clock next Saturday.